You ever hear that saying, the first 100 grand is the hardest? Yeah, that ain't just some random quote. Every successful person's been through it. That's coming from Charlie Munger, billionaire investor and Warren Buffett's longtime business partner at Berkshire Hathaway. And yeah, he wasn't kidding. Ask anyone who's built wealth. Most will tell you that getting to your first 100K feels like climbing a mountain in flip-flops. But once you hit it, things start moving a lot faster. Before you know it, it's $200,000, $300,000, then boom, $1 million doesn't seem that far off anymore. So, why is that first 100,000 such a grind? And more importantly, how can you speed that part up so you're not waiting until you're 60 to feel wealthy? So you are in Dollar Curve's channel. Here I talk about money, saving, growing, and investing it. If you're trying to get ahead financially, hit that subscribe button, and if this helps you out, drop a like. All right, let's roll. Why most folks don't get started. One of the biggest hurdles? Just getting started with investing. People treat it like flossing. Yeah, I should do that, and then don't. They say, I'll invest once I have more money, which is like saying, I'll put gas in the car once I get to my destination. Nope, doesn't work that way. You don't invest because you're already rich. You invest because you want to get rich. It's too risky. Another classic line? Investing's too risky? Sure, it can be risky if you throw your money into crypto you heard about on TikTok, but not investing at all? That's the real danger. Taking that first step is the hardest, especially when the finish line feels miles away. That's why most people just delay it for years. Heavy lifting in the beginning. Building your first 100K, that's mostly you grinding it out, stacking paychecks, living cheap, and investing every dollar you can. But once your portfolio gets some size, compound interest starts doing the heavy lifting. Let's talk numbers. You invest $5,000 and it grows 10% in a year? That's $500, not life-changing. But when you've got $100,000 working for you, that same 10% is $10,000. That's a used car, a family vacation, a real chunk of income. Fast forward to $1 million portfolio. 10% return means $100,000 a year. And that's without even lifting a finger. That's the dream, the snowball effect. People say once you hit $100,000, things start snowballing. And it's true. The money grows faster, and suddenly you're hyped to find more ways to grow it. You might start skipping Uber Eats and cooking at home just to invest that extra $100 because you know what that 100 could turn into. Example, $100 invested today at 10%, that's $10 the first year, $11 the next, $12 after that, and it keeps stacking. It's not just about that $100, it's about doing that again and again. Why hitting $100,000 matters. Once you've got some money saved, you've got options. Let's say your job pays $50,000, but you get an offer for a sales gig that's commission-based. High risk, but high reward. Like, you could make 6 figures easy. Most people can't take that leap. They need their paycheck. You, with savings, you've got cushion, you can take the shot. Want to start a side business? Real estate deal pops up, a friend's launching a startup, and you can get in early? These are the kind of life-changing opportunities that show up when you're in the game, but only if you've got the capital to play. Taking bigger swings. More money means more freedom. You can afford to take calculated risks. You're not betting the farm, you're just diversifying. Got a hunch about a stock, a crypto, a friend's new brand? Go for it. If it doesn't work, you're not bankrupt. You've still got your core investments riding steady. People who are living paycheck to paycheck, they don't have that luxury. One wrong move and it's game over. How to speed it up? Still chasing that first $100,000? Cool. Here's how to fast track it. 1. Increase your income. Get a weekend job, freelance, flip stuff online, start a side hustle. 2. Unnecessary spending. That $6 coffee, that $100 dinner out, yeah, it adds up. 3. Avoid dumb debt, fancy cars, flashy clothes. They're fun now, but they slow you down. 4. Save first, spend later. Reverse your mindset. Pay yourself before you pay Apple, Starbucks, or Amazon. Build habits, not just wealth. Once you get into the habit of saving, investing, and watching your money work, it becomes second nature. You'll think twice before blowing cash on stuff that doesn't move the needle. You'll start seeing every dollar as a little worker you're sending out to make more dollars. And as your money grows, so does your confidence. You'll get more comfortable with risk. You'll understand how the market moves. You might even start looking forward to downturns so you can buy the dip. Final thoughts? Chill. It gets easier. Charlie Munger said once you hit $100,000, you can ease off the gas a bit. Because from there, compound interest becomes your best employee. Sure, hitting that first million is the next milestone, but it's a way smoother ride once you're in motion. So, if you're out here grinding, feeling like your net worth is stuck in neutral, just remember, it gets easier, faster, and a lot more fun. Stick with it. Future, you is going to be real glad you did.